On February 24, 2022, Russia launched a full-scale attack on Ukraine, sending shockwaves through the global economy. Russia's war in Ukraine caused immense hardship to many, but it turned out to be a significant loan for one Indian billionaire. Gautam Adani's net worth soared from $9 billion to an incredible $90 billion in less than 2 years, surpassing Mukesh Ambani in 2022, who had been the Forbes richest Indian person in 2009. So how did Gautam Adani position himself to benefit the most from this war? To understand this, we need to delve deep into his journey and strategic business decisions. Gautam Adani was born on June 24, 1962 in Ahmedabad, Gujarat. At 16, he moved to Mumbai to work for diamond merchants Mahindra Brothers. In 1981, he returned to Ahmedabad and started his own diamond brokerage firm. His entrepreneurial journey took a significant turn in 1988 when he founded Adani Enterprises Limited, initially dealing with agricultural commodities and later diversifying into coal trading. In the 1990s, the Adani Group entered the port sector, transforming Mundra Port into one of India's largest commercial ports. This was a critical move for Adani's success. By 2006, Adani Ports and Special Economic Zone was established, consolidating port operations and developing SEZs across India. In the late 1990s, Adani Power was founded, marking the group's entry into power generation. The company developed several thermal and solar power projects, significantly contributing to India's energy infrastructure. In 1999, Adani Wilmar Limited was established as a joint venture between Wilmar International and Adani Group, aiming to dominate the edible oil market. By the 2000s, the Fortune brand was launched, quickly becoming a household name for edible oil in India. The global edible oil market consists of four main oils: canola oil, sunflower oil, palm oil and soybean oil. These oils are key ingredients in almost every FMCG product that we use every day, ranging from soaps to potato chips. Soybean oil primarily comes from Argentina and Brazil, and canola oil comes from Canada. Both soybean oil and canola oil's supply were already affected in late 2021 due to poor harvests in Argentina and Canada. Then came the Russia-Ukraine war in early 2022. It severely disrupted the global supply of sunflower oil. Russia and Ukraine together accounted for 70% of the sunflower oil production pre-war. After the war, the production decreased by 50% from Ukraine. With the global shortage of sunflower oil, the demand for palm oil skyrocketed. This shift put pressure on Indonesia, the largest producer of palm oil. To ensure sufficient domestic supply and stabilize local price, Indonesia government temporarily banned the export of palm oil and its derivative products. Indian FMCG companies are heavy users of palm oil, which is cheaper than sunflower oil and canola oil. India, being the world's largest importer of palm oil, was heavily impacted by the rising prices and limited supply. Prices of crude oil, coal and edible oil, which had already been rising in the second half of 2021, shot through the roof. These changes benefited companies who were producing palm oil. In India, Adani Wilmar, which had established itself as the country's largest palm oil producer, controlling 20% of the market, saw its stock skyrocket more than 200% in around 2 months. To mitigate the impact of these disruptions, the Indian government increased imports from Malaysia by approximately 20 to 25% and explored other edible oils from Argentina, Brazil and even Ukraine despite the war. As a result, ports like Mundra saw a significant rise in edible oil cargo. Mundra port, which was already handling approximately 150 million metric tons of cargo annually, saw an estimated increase of 15 to 20% in edible oil import. As a result, Adani Ports and Special Economic Zone's stock price has doubled since the war. Gautam Adani's companies were strategically positioned to benefit from this change. Another Adani company, Adani Power's share price skyrocketed from 125 rupees a piece to 328 between February and May 2022, a jump of almost 250%. It is currently trading at around 750 rupees, which is 6 times the price before the war. This mainly happened because of the rise in coal prices after the war, and Adani, being the largest coal importer in India, added billions in his wealth. About 70% of his $107 billion wealth comes from 3 of the 7 listed companies in his group. But interestingly, despite the sharp rise in the value of Adani companies, there are very few stock market analysts formally covering the Adani stocks, which is extremely surprising to some stock market experts. Companies of this size are normally covered by a whole host of analysts. Majority stakes of 75% in Adani Enterprises, Adani Power and Adani Transmissions, and significant stakes in Adani Total Gas, Adani Ports and Special Economic Zone, Adani Green Energy, and indirectly in Adani Wilmar. This implies that the spectacular rise in Adani companies has mostly happened with a very narrow and institutional investor holdings. Critics also argue that Gautam Adani's rising wealth has a lot to do with his friendship with India's Prime Minister Narendra Modi. They say it may have helped him win several Indian government contracts. For example, in February 2019, Adani Group won the contracts to run airports in 6 major Indian cities, despite having no major experience running airports. Now, Adani Group is the largest airport operator in India. Adani's rise to the richest person in India is not without controversies. A report released in January 2023 by Hindenburg Research accused the Adani Group of engaging in stock manipulation, accounting fraud, and money laundering over decades. It claimed that Adani family members and close associates used offshore shell companies to inflate the stock prices of Adani entities, enabling them to maintain high valuations and secure substantial loans. Following the release of the report, Adani Group's market capitalization saw a sharp decline, but soon recovered and has continued to climb upwards since then. Adani's story continues to surprise many. For now, Mukesh Ambani has regained his spot of Forbes' richest Indian. Both Ambani and Adani, two of India's biggest tycoons, are profiting immensely from the global surge in commodity prices. However, the economics of their businesses differ significantly. We'll dive into these differences in our next video. Stay tuned.